Welcome to ForexTV.com. Today is Tuesday, October 14th. I'm Remy Hoki for New York Forex Market Buzz. The US dollar is lower against the euro and the pound, but has come off earlier lows. Meanwhile, dollar yen is paring back gains from this morning. And now let's take a look at the latest headlines from the CP News Desk. A rally in North American equities faded throughout the morning following the details of the U.S. rescue plan. The plan was revealed in a joint announcement by the U.S. Treasury, Fed Reserve, and FDIC. The plan involves using up to $250 billion to buy senior preferred shares that are non-voting and callable after 3 years. The Treasury plans to take stakes in 9 major financial institutions, but expects thousands of more. The banks who participate will be subjected to executive compensation limits. The money will come from the $700 billion authorized by Congress. Now, the White House announced that President Bush had signed the letter releasing the funds. And U.S. Treasury Secretary Henry Paulson said the lack of confidence in the U.S. financial system, quote, must be conquered because it poses an enormous threat to the economy. Fed Chairman Ben Bernanke said the Fed was using all its powers to deal with this crisis. Commenting on the Treasury's auction to purchase equity in financial institutions across the country, Bernanke added that the time had come for a more comprehensive and broad-based solution. In a separate announcement, the Fed announced it would begin funding purchases of commercial paper on October 27th. Meanwhile, a second part of the bank rescue plan involves the FDIC temporarily guaranteeing the senior debt of all insured institutions and their holding companies, as well as deposits in all non-interest-bearing deposit transaction accounts. And in Canada, media reports are emerging that the government is prepared to increase the $5 billion mortgage buyback to $225 billion. Today, the Bank of Canada moved to increase liquidity within the country's financial system and to expand the range of collateral that banks can use to access the extra cash. Also today, Canadians head to the polls during the country's national election. And very quickly in overnight news, Eurozone industrial production rebounded 1.1% in seasonally adjusted terms in August. That follows July's 0.2% decline, which was upwardly revised from an initial estimate of minus 0.3%. And the Center for European Economic Research, or ZEW, reported that economic sentiment in Germany fell to negative 63 in September from August negative 41.1. A notable decline was also seen in the German current situation component, which fell to negative 35.9 from August's negative 1 level. And over in the UK, inflation surprised to the upside in September, rising 5.2% in annualized terms. The August reading posted an annualized figure of 4.7%. And in other news from the UK, house prices fell 3.4% in August compared to the same month 1 year ago. Joining me this afternoon to weigh in on the latest in FX is Esiner, Senior Market Analyst at Ruesch International. Good afternoon, Omer.
Good afternoon.
Thanks very much for joining me today.
Thanks for having me.
Well, in afternoon North American trade, the dollar is trading mixed against the majors, and so are the major indexes for the U.S. equities. We know that the U.S. dollar has pared back some of its losses against the euro, but how do you see the latest moves of both European and U.S. governments weighing on the euro dollar in the near term?
Well, I think for the very near term, we're probably going to see the U.S. dollar under a little bit of pressure as a result of a kind of a rebound in the euro. We've seen the euro sell off very sharply over the last couple of weeks on this growing idea that officials in the eurozone might be falling behind the curve in terms of addressing their economic fallout from the credit crisis, and the steps that they had taken to stabilize markets were being seen as insufficient. The latest measures taken by the European governments were met with cheers from the markets. We've seen European equities rally, although, as you mentioned, they have come off their highs late in their session overnight. But I think going forward, again, we're probably going to see the U.S. dollar come under a little bit of selling pressure against the euro as the market starts to digest the developments in Europe with regard to their bailout package. And I think the euro has some room to the upside as it plays catch-up here.
Well, Omer, the U.S. dollar is not only seeing downward pressure against the euro today, but also against the pound. Now, the UK currency has seen a rally after tumbling at the end of last week. So how are you assessing the outlook for sterling right now?
Well, again, in the very near term, I think sterling will probably have some more room to the upside against the dollar as the market kind of recalibrates and prices in a little bit of a rebound here in sterling, given the fact that the British government was also pretty quick to bail out their financial sector. So I think that's going to have some upside for the British pound. But again, going forward beyond the medium term, I think, even in the medium term, I think that the pound should remain biased to the downside, given the fact that interest rates have so much room to fall in the UK. They're currently at 4.5%. The British economy is, by all accounts, in recession already, and so I think we'll see an aggressive campaign of interest rate cuts from the Bank of England, which should undermine the pound against the US dollar going forward.
Well, Omar, given the latest moves by the global central banks as well as national governments, there is reduced demand for the greenback as a safe haven. But the yen is also paring back its recent advance against the majors, and we're definitely not out of the woods yet. And it's too soon to call a bottom for U.S. equities or for the fallout from the credit crisis. So what does this mean for the Japanese yen?
Well, again, I think it's going to depend on the developments regarding the credit crisis and how the market really reacts in terms of risk appetite. As you mentioned, the yen is well off of its highs, given the announcements from the U.S. government and the British government and the Eurozone or European governments as well. So I think, if we do get a further reduction in risk aversion, if the market continues to trade higher on these bailout packages, then you can expect the yen to remain under pressure, probably giving up more of its recent gains against the U.S. dollar and the euro. If we do see another spike in concerns about the credit crisis, or if the market deems this latest evolution of the bailout package to be insufficient, then I think you could see, once again, risk aversion spike back up, and that would most likely see the yen trade back towards the higher end of its recent ranges.
Okay, Omar. Well, now that we've covered most of the majors, because of this rebound we're seeing in the carry trade for now, for the Australian dollar against the U.S. currency and also the Japanese yen, do you forecast a chance to sell this rally in the coming sessions?
I do. I think, again, we are still vulnerable with regard to fallout from the credit crisis, and we've seen the Australian dollar react extremely negatively to any spike in risk aversion. So I think, again, if we do see that the market deems the latest kind of evolution of this bailout package to be insufficient in dealing with the credit crisis, then certainly I think the Aussie will have more room to the downside, most likely test its recent lows. However, I think if equities continue to remain, or if equities are able to avoid another disastrous sell-off like we saw last week, then I think the Aussie could remain relatively underpinned. Given the fact that it has sold off so sharply, I think it could have a little bit more room to the upside if conditions in equity markets stabilize.
Okay, Omar. Well, last but not least, before we wrap it up, we've covered the majors and you've given us your short-term forecast, but we do have inflation data, housing starts, and retail sales data coming out this week in the U.S. So which releases will you be paying attention to and why?
Well, I think at this point the inflation data is likely to take a backseat to economic data pertaining to the real economy here in the U.S. So I think, at this point, inflation is probably not going to be as important as retail sales on Wednesday. We do have the Fed Beige Book, which is also due out on Wednesday. That should be helpful in getting the latest in terms of the Fed's outlook. On Thursday, we get industrial production. That will be very closely watched given the sharp decline that we saw in industrial production the previous month. Finally, on Friday, I think housing starts and the University of Michigan's Consumer Sentiment Index. Those are all much more closely related to the real economy, to the state of the consumer here in the U.S. And I think going forward, once the dust of this credit crisis settles, those are going to be the real issues that we need to tackle. So those are the ones I'm keeping an eye on this week.
Okay, Omar. Well, we're all out of time for today's interview. Thank you very much for joining me, and thank you for your insight and analysis.
Thanks for having me.
Thank you. This has been your New York Forex Market Buzz with Omar Esiner, Senior Market Analyst at Ruesch International. I'm Remy Hoki. Join me later this afternoon, 4 p.m. exchange, right here on ForexTV.com.